Welcome to Momentum Monday on a Sunday morning.
Yeah, why not?
Why not? Of course.
Government's working, we'll work. You are back in San Diego.
I'm back in San Diego. I went to play some.
I can't see you. I'm seeing a chart.
1 second. I went to play some volleyball yesterday. I was a little rusty, but it was a good game.
That's amazing.
I'm
I was
happy that I'm back.
in New York for 2 weeks. I didn't work out, and then last 2 days, I did yoga with Ellen, and I'm just destroyed. Can't move. I did a little bike riding. Let's get right to it. Let's get to the markets. The charts are we got a sponsor for the show. It's Market Smith that Ivan loves using. So walk us through the indexes, Ivan, where we're at.
So last week we saw some initial attempts for a pullback, and the important thing is that 260 level held. 260 has been extremely important for the S&P 500. Over the past year, we saw how many times last year it acted as support. And then near the end of 2018, when it broke, we saw a quick flush lower. And now that we're above it, last week we tested it, and now it acts as support. So I think that's a bullish market development. Of course, keep in mind that we are approaching that 200-day moving average, where I think it's the next major level of potential resistance. But as of right now, there are plenty of stocks breaking out and acting well.
And would you want to go? Let's go to the SL50. I think. Let me just explain what we've got here for people just tuning into Momentum Monday that were Peloton subscribers of mine. Ivan and I set up this market wisdom site. Ivan's been running it, I don't know, for a couple of years. There's a lot of happy subscribers, and there was it was time, and there was some people asking for me to start Peloton, which is a much longer term, one idea a month or 10 to 15 ideas a year, whatever the markets will comply with. Very long-term ideas. It's based on, how Ivan and I look at the markets. I'm much longer-term thinking. So Ivan, just take them to the front page here. So we've brought back kind of a combination of both of our strategies at Market Wisdom. I am going to be chiming in with extra videos and content with Ivan and some other special guests every week. And then once a month, like I was doing a Peloton, trying to come up with a very, big idea that I think can, have, 4 or 5% upside to downside, just with simply buying stocks, no options, nothing special. Ivan sticks to options. People can take my ideas and trade options off of them, but, very simply, 10 to 15 stocks a year, stocks that I think have huge catalysts for a big upside. We have a good track record of doing that over the years. A lot of those ideas come up right here on this Momentum 50 list that we're going to start with, that Ivan and I built over the last few years or 10 years. So Ivan, so what we're offering, a special discount to people that were subscribers of Peloton. So just hit us up by email. And we have a special discount for people that were paying for my previous Peloton, which I stopped doing middle of last year. Okay. So Ivan, this is Momentum 50. Let's walk people through this, and then we can talk through how this works.
Yeah, so the Momentum 50 list, it's a weekly list. It's updated once a week, and it features 50 of the current market leaders that are setting up or breaking out.
These are not for the faint of heart. These are the highest growth. We kind of curated the highest growth, highest relative strength.
They're high growth, high momentum, very volatile. In good rising markets, they will outperform the S&P 500 by 3 to 4 times. But in falling markets, in corrections, they are going to underperform substantially, and which I think it's a great news, because they can also be used as great shorting ideas, which we've done.
Yeah, I mean, what people need to understand is we're also trying to, not own 50 stocks at a time. We're trying to understand, use our knowledge of applying catalysts and a little bit of tactical strategies and a little bit of seasoned eyeballs to kind of pick 4 or 5 ideas that we think stand out from our curated list. We've been really focused on enterprise software the last year and a half, and that's worked well. But I think if you scroll down, we're going to start to see a lot of new type of companies, from big data software to biotech, and we're seeing some
even in the medical space, there's some very interesting new stocks and companies.
And then I see cyber there. That's a stock that I've in the CYBR, which is just primed.
Oh yeah, cyber is looking amazing. It's just setting up for a breakout.
Sure, I've been trying to do some work here and make some phone calls. I mean, from a pure technical perspective and from earnings perspective, it's not growing super fast, or it's not expected to grow super fast this year, but it's had a great couple of years of growth. And still expected to grow 10%. But network security software not going away. Networks continue to get built. Networks continue to get relied upon. And as we've seen, it's in the news every day. So the 2 leaders here are Cisco, but PANW. Cisco is the large cap, and there's PANW, which is forming a base, but cyber and Checkpoint, but but which maybe wedging up, but cyber seems to be the leader in this go around. So if you want a lot of juice in your portfolio, and it's a pretty tight base compared to some of the other names that I've been watching, this has been a pretty tight base for as volatile as the market's been. About a 15% kind of for a high growth stock. And we're looking at a breakout that could go back 6-7 years.
Yeah, look how it managed to hold its 200-day. That very few stocks actually did that.
Has this shown up on your swing trading? I'm sure this will show up quickly.
Well, it's on the Momentum 50 list. So yeah.
No, but have you swung traded at all or no?
No, I have not traded it yet, but it's setting up. It is setting up right now, but I have not traded it recently.
It is the size of the company. It is a 28 billion. I can't.
Okay, let's go to weekly. It's easier. It's 2.8.
So it's a small company. This is interesting. I definitely have some calls in 97 relative strength. I think if you want some exposure to this space, it's setting up perfectly right here. If it takes out these highs here this week, I'm tempted to own a few shares myself. Okay. And again, it's headquarters in Israel. And it's not a new company. It's been around for a long time. It's been growing earnings. It looks like 7-8 years in a row. So
it's been a.
And obviously
it earned 19 cents in 2011. Next year is expected to earn $2. So that's 10 times.
Yeah. In 2011, what was the stock?
I mean, they IPO'd in 2014, so
they've been profitable since before they went public. Okay,
yeah.
So and is that new on our SL50 list, Ivan?
Oh, it's relatively new. It's been back and forth, but where did you see it?
Down in the middle.
Oh, right here. So it's 8 week. This will be 8 week. It's been already 7 week on the 7 week.
And we can see Exact Sciences is joining it on its first week, and that's one that I've been talking.
Last week was its first week. So yeah.
Okay. You can see the names that have been on here for a while that we've been long at the top. Twilio,
Twilio, 39 weeks already.
And that's what we probably caught on the first week. So our goal here is to catch these stocks as they come on in the first few weeks. And the joy of this list is really these trend lists. They can last, like we've seen with Twilio.
You never know how long a trend could last. Look at this one, eHealth. we had no idea when it joined the list 14 weeks ago that it would almost double in one of the worst markets in recent market history.
An simple insurance broker. So we'd love to find names that are just showing up here. CyberArk, wow.
Look at the relative strength. It barely
it showed up on the list. We definitely missed that. But that's the joy of this list. This is where the winners show up. And you may, our listeners may have expertise around some of these sectors that you and I don't. But I get excited when I start seeing a lot of companies show up for the first or second week, especially companies that I've never heard of. There's one, Rapid RPD, application software. It's only second week.
So it's been 2 weeks. So the number here shows how many weeks it has already been on the list. So, for example, data, it's been already 22 weeks. This week, starting tomorrow, will be its 23rd week.
Got it.
And when you see an N, N means new. It's just
CDNA.
So CDNA is a new one. Yeah. It's just joining the list.
We're starting to see a lot more healthcare. It's a beautiful looking setup. How big is this company? This company is
it's 1.2 billion.
Yeah, so small company.
Very volatile. I mean, it was last year. It was like under $1, and now it's
cellular rejection. Blah blah blah. Way over my pay grade, but technically, just hitting the list today. So, what would that look like in 40 weeks if it could last? I think people just need to understand how this works. The list. And we're shooting to find companies and understand catalysts like we did with Twilio that we think, can survive on this list for a year. And when these things last 20 to 40 weeks on the list, you're going to have massive gains. Anything else that stand out on here, Ivan? PayPal. So a lot of our favorite ideas, Okta. I think
it's the same. Medicare, biotech, enterprise software, cybersecurity. That's the same team. I mean, there's some really good retailers that are looking actually good. I think Etsy is setting up again.
Which I'm long.
Yeah, it's just looking amazing for a new breakout. And of course, keep in mind that we are in the midst of earnings season, and next week will be especially busy. We have so many of the big players reporting, like Amazon, Apple, Tesla, like many of the big players report this week, and that will definitely cause some volatility. But going back to my point, there are quite a few retailers that are actually looking well again. We saw Lulu that they pre-announced and they raised guidance. It's just looking incredible again, setting up near all-time highs.
It's an 8 to 80. Yeah, it's one of my.
Nike is looking great. This one, Burlington. And the good thing about retailers is that they're usually the last sector to report earnings. That means that their earnings are due in 6-7 weeks, so you don't need to worry really about earnings risk, gap up or gap down. So quite a few of them are looking good.
So I think the key is for this week, Ivan, is earnings are coming up. There are some great steps. I don't think you want to be taking too many. We'll talk about Apple too. I think Tesla and Apple are the most interesting ones. So I'll wrap up in a minute, but let's take a look at Apple. It's now back closed. Apple back closed above the meltdown price, or Tim Cook's warning and Apple's warning. So it's pretty interesting. I don't think it can. Listen, I think if it gets some juice, it'll help the markets tremendously, and it'll help the stocks that we're talking about earlier go much higher, much faster. So we need a strong Apple. The question becomes, how much of that last warning is priced in, and what he could or could not say to make it better or worse. I have no idea. I don't think you want to game this. It's not important. If Apple news is accepted, when the earnings are accepted well, you're going to see some continuation breakouts in the stocks on that SL50 list. If Apple goes up, that's good for the NASDAQ and good for the markets. But technically, it was a nice close on Friday to kind of gain back the Tim Cook where their Chinese warnings. But like, business in China is not going to get better. It's only going to get worse. This is this is going to be a slog for Apple to kind of survive and grow in China. And they're a victim of their great products. The iPad doesn't need replacing. The iPhones are not being upgraded, which is a good sign for a company that has great products, but it's not what Wall Street wants. Wall Street wants razor blades and razors. So I think we're looking at dead money for the most part in Apple, but it will drive select areas of the market. With Tesla, something different. Tesla's reporting, the cult of Tesla. To trade this is crazy. If you go back out to like a weekly or a monthly, the big moves here are, below 240 and above 400. I don't, but it's going to be a wild with the layoffs and with the short sellers. This is going to drive a lot of headlines this week. But for traders, if this is where you're focused on, you're doing something wrong, because is the way Ivan and I look at the market. There's some great ideas that will benefit if Tesla and Apple are good, and that hopefully will struggle less if Apple and Tesla are bad, because they've been strong right through their weakness. So let's go back, Ivan, to the SL50. I think what people have to take away here is there's some fast growers on this list. There's some old names that are working. There are some new names showing up on the list in biotech and software. And even though the S&P is below its 200-day moving average, there is a lot of strength in individual stocks. So kind of mixed signals, but at the same time, I don't think you can avoid taking some of these stock ideas seriously, considering the strength in what was a horrific fourth quarter.
Yeah, I mean, if you manage money professionally, you cannot just stay on the sidelines when the market is rising. You just have to take some of the breakouts and just see if you're right or not. I mean, if you're wrong, you just take a small loss, 5-6%, because if you're right, you'll probably make 3 times as much. So you just have to take the risk in when you see so many setups.
And I started doing that with a couple ideas last week, as we shared with subscribers, and we'll do this week. So, but by all means, between Ivan and I, the strategy is very much aligned. I'm looking for stocks that'll last on this list, 20 to 80 weeks. Ivan uses swings within this list. He's
yeah. I'm looking for short-term swings, a few days to a few weeks. I'm looking for like quick 5 to 30% moves, and I'm trying to capture several hundred moves in a year, trying to quickly multiply, quickly compound.
Yeah, so that's the difference. They work well together in the sense that Ivan understands the ranges these stocks take, and I'm looking for companies that can, that gain 100 to 200%, even though they're public companies. But they're generally from the lists that we create, and we want to find companies in the strongest sectors, with big themes and big institutions pushing them. Okay, everybody, have a great week. Ivan, welcome home.
Thank you, and we'll see you next weekend.
Okay.
I mean, next Monday, I guess.